Welcome back to the podcast. Don't forget to go to the website at retireyoungaudio.com and leave us a comment. Also, subscribe to the Retire Young podcast at Apple Podcasts, iHeartRadio, and Spotify. Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are happy to have you with us today. Once again on the program, I have my great friend, my great pal, Al. How you doing today?
I am doing fantastic. How about you, Josh?
I can't do any better. I got a tea time today, but we have more important things. We have to talk about the financial markets today.
We should do that because there's a lot to talk about.
There's a lot going on in these financial markets, and we have a lot of listeners that are involved and they're invested in these financial markets and just want to understand the opportunities that we're seeing out there. We're seeing volatility. We talked about this last week, how much volatility that we're seeing. But with what's going on right now, I want to get into these other asset classes that we're going to get into in the show here today. We're going to talk a lot about these futures markets, the Forex market, the options markets. I also want you to dissect here today the retirement plans, the retirement strategies, the 401ks and IRAs. Before we do that, let's hit up these awesome markets. We had some great moves this week again. What's going on, and how can the average investor participate in these financial markets?
Yeah, it's another crazy week. We're seeing huge point moves up and down, and we're also seeing all sorts of opinions out there. And this is a great time not to listen to those opinions, but just really follow what is actually moving the market. It's a great, I guess, lesson in not just playing this market or these markets in one direction. Unfortunately, that's what most people are doing if you're in a stock portfolio or a mutual fund portfolio. Those will give you the opportunity to do well if the market is going up, if that asset's going up in value. But we saw this last week. Friday, for example, was a big down day. People did well if they were in a strategy that made money, that was profitable in a down market. It's important now, probably more than ever, to at least have protection on your portfolio, maybe hedge the portfolio, make sure you're properly diversified. And what Wall Street has convinced you is diversification is to have a number of different stocks or maybe a number of different mutual funds. That's not really true diversification. It might help to mitigate loss a little bit, but it really is not true diversification. Being truly diversified is having assets that are not correlated to each other. And most people just are not introduced to those. And that's one of the things that a proper education should provide. It's not just how to participate in an up market, because markets don't just go up. They go down, they go sideways. So there's three different directions, and there are strategies that can be used in each direction to realize profit from the market.
And think about that too, Al. A lot of people are in mutual funds and maybe some stock, but you have to have that three-directional approach because the markets do go up, down, and sideways. Right. But if they're invested in all mutual funds and the markets are going up, they hopefully should be going up. But when they go down, they all go down as well. So that's not true diversification.
Right. Yeah, and there's no guarantee that in an up market what you have is going to go up. But basically what you're doing is only participating in one out of three opportunities. And those are not real good odds. Wouldn't it be better to have the opportunity to have success in 3 out of 3 directions? And that is available. And you know who's doing that right now?
That is Wall Street.
Wall Street is doing that. Right. The institutions know how to do that. And I think the interesting thing is that Wall Street puts their money in not only stocks, but they put their money in futures, in the futures market, in the foreign exchange market, in the options market. But they put their clients' money primarily in mutual funds and annuities. Why is that? Why are they doing one thing and telling their clients to do something else?
That's one of those things, do as I say, not as I do, isn't it?
Well, that's excellent. And that's exactly what we emphasize is don't do what they say, don't do what they tell you to do. Just do what they're doing. Follow what they're doing. How do you do that? Well, we have a strategy that has been developed and fine-tuned over the years that does exactly that. It looks at the engine that drives the movement of price in any market. Doesn't make any difference what the market is. You know, you already kind of mentioned futures and Forex and options. Yeah. And we're going to talk about those, but all of those markets in the real estate market, they all are a function of supply and demand. We talk about that a lot Some of you might be going, oh, they're going to talk about supply and demand again. But that is what impacts the price of anything. And as much as possible, you need to understand that and be able to follow where supply and where demand are going to be impacted.
And that's how the markets work. It's just like anything else does in life. And you got into a lot about these, different directions. They go up, they go down, they go sideways. We're seeing some phenomenal moves in these markets. I think it was 600 points down on
700 over 700 on Friday.
On Friday. That's just one day. So think about that. Think about the opportunity that's there that the average investor doesn't even know about. Wall Street knows about it. The institutions know about it. That's why it's important to understand how the institutions trade and invest, how they're buying and how they're selling. And Al, you had mentioned a strategy, and we have, Al, as we had kicked off the show, we're going to get into the futures market, the forex market, and the options, and how the institutions are trading for income.
Thanks for listening. Don't forget to check out the website at retireyoungaudio.com and leave us a comment.